program, and then we pray to Allah subhanahu wa ta'ala to accept it and count it as one of our good deeds on the day of judgment. Inshallah, I think we have a good number of people on the call now, and then our facilitator is very much around, is here with us. In fact, he has been here before 11 o'clock. We need to appreciate that. Jazakumullah khairan, sir. We are going to start with an opening prayer. I will call on my brother, Brother Amid Izad, to lead us with that.
Dr. Nabil, Assalamu alaikum. This is Professor Mustafa. You are welcome.
Wa alaikum salam wa rahmatullah. You are welcome, sir.
Thank you, my
Dr.
teacher.
Nabil,
Yeah.
Dr. Nabil, how are you?
Alhamdulillah. Thank you for joining, my
All right.
professor.
Hi, sir. Brother Amid, please, your opening prayer, sir.
نعم السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على رسول الله محمد بن عبد الله وعلى آله وصحبه وله. We give praise to Almighty Allah subhanahu wa ta'ala who has make it easy for us to be alive up to this moment. Also who has make it possible for us to hold this this edition of Safir webinar. We ask Allah subhanahu wa ta'ala to make it to count among the good deeds for heaven of us. Lecturer, may Allah subhanahu wa ta'ala make the lecture easy one for him, and may he make it a beneficial one for every one of us in this life and hereafter. سبحانك وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين.
Jazakumullah khairan, Brother Amid, for that prayer. We pray Allah accept it from us. Yeah, so before we start, permit me to quickly introduce our guest lecturer, our facilitator for today, Dr. Nabil Jello. He is the managing director and co-founder of Kunuz Investment Limited. He is a pioneering figure in Islamic finance with 18 years of experience specializing in Sharia audit, compliance, and ethical investment strategy. So, as the managing director of Kunuz Investment, he leads the company with a clear mission to deliver Sharia compliant fund management solutions that empowers individuals, institutions, and communities to grow wealth ethically and sustainably. So before Dr. Nabil established Kunuz Investment, he held key leadership roles at Jaiz Bank, which happens to be the Nigeria's premier Islamic bank. He is also, as the head Sharia unit, he oversaw critical governance function, including ACA coordination, audit exercises, and internal training. Dr. Nabil also served as head of private institution banking, where he built strategic partnerships and deepened institutional trust in Islamic finance services. Dr. Nabil's academic credentials are equally distinguished. He earned a PhD in Islamic banking and finance from the International Islamic University in Malaysia and holds a postgraduate diploma in Islamic Studies and Sharia from Bayero University, Kano. He has lectured at Bayero University and Ahmadu Bello University, teaching courses in Islamic capital markets, zakat, Waqfu, Islamic finance planning, and governance of Islamic financial institutions. So Dr. Nabil is also a certified Sharia advisor and auditor and brings a rare blend of classical Sharia knowledge, modern financial acumen, and strategic foresight. His expertise spans Sharia compliance investment structuring, business and data analysis, strategic planning and project management, institutional training and capacity building, ethical governance and stakeholder management. He is also a published author in respected journals and a recipient of Nigeria Islamic Finance Leadership Award, mashallah, recognizing his contributions to the growth of Islamic finance in West Africa. So Dr. Nabil, he is committed to building a legacy of trust, transparency, and transformative impact. So, Alhamdulillah, guest lecturer is an accomplished finance auditor, certified Sharia advisor and auditor. So, permit me to welcome him on board, and then you can drop your emoji on the call by dropping your emoji on the call. Let's appreciate our lecturer. And I'm going to pass the mic in, inshallah, to start the session for today. So what is he going to talk about? So we'll be discussing on structuring Islamic financial products. So what exactly is he talking about? The product, and it is MUDARABAH. He will be talking about MUDARABAH. Uh, Everything I stated with MUDARABAH. May Allah subhanahu wa ta'ala make it an easy one for him, and then count it as an act of worship for him on the day of judgment. Dr. Sir, you are welcome. Assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Okay, please. Yeah. I'm using two devices, so I would just like a confirmation from you that I'm clearly here. I'll be sharing my screen from my computer, and I'll be speaking through my phone. Yeah, sometimes it's better that way for me. Yeah.
That's okay, sir. That's okay.
Okay, alhamdulillah.
Okay.
So, Bismillah ar-Rahman ar-Rahim. Sallallahu wa sallam wa baraka ala nabina Muhammadin wa ala alihi wa sahbihi wa sallam tasliman kathira. سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. My brothers and sisters, I greet you. Assalamu alaikum wa rahmatullahi wa barakatuh again. And I want to express my gratitude for inviting me. I'm really humbled. I'm happy that you invited me to make this presentation. It's a topic very dear to my heart, and I believe we need this kind of presentations more than before. There's a background noise. Please don't worry about it. I decided to hide in one office, but very unlucky, there's a wedding that is going to end very soon, maybe in just 2 to 3 minutes. Yeah. So this topic, structuring Mudarabah products for Islamic cooperative society, I want to take us through a practical Sharia compliant framework so that we understand how to do the structuring. But before I go into the main topic, I would like maybe 2 to 3 people just volunteer. Just tell me who you are, especially if you are coming from any cooperative society, and just let me know what is your expectation from my presentation, please. Any volunteer, please?
Assalamu alaikum.
Wa alaikum assalam wa rahmatullah.
If I'm allowed to speak, can I?
Of course, sir.
When I saw the advert, I felt obliged to attend. Why? Because I observe with keen interest trends and scenarios in Islamic finance industry in Nigeria, from banks to mutual funds to foundations and cooperatives.
Okay.
I have seen a lot of happenings. Some are not to be said publicly.
Okay.
Yeah. In some cases, I got disappointed. I must be frank. I will let you privately, Dr. Jamil, some of my hard lessons. So I felt um, people like you who are pioneers, who are part of those who inspire, haven't had the practical touch as well the academic touch of Islamic finance at domestic and international levels. I believe you will do a lot of justice to this presentation. Some of the practices in cooperatives is unfortunately a terrible experience.
Okay, Prof, you are going into details. I just wanted you to tell me this is what you expect, maybe before I
Okay,
end the
my
presentation.
my expectation is you will give us a lot of scenarios
Good,
that
good, good.
that
Workable
cooperatives
scenario. Yes, yes.
workable
Okay.
scenarios. Yes,
Oh,
that's my
thank you so much.
expectation.
Thank you so much. Thank you so much. I can see Mr. Lukman or Motor Show raises his hand.
Okay.
Please.
Assalamu alaikum. Please confirm you
Alaikum
can hear
assalam.
me.
Yes, I can.
Okay, as you mentioned, my name is Lukman Omotojo. I'm the president of Forerunner Interest-Free Cooperative, which is
Excellent.
with the headquarters in Ibadan, Oyo State, Nigeria, but
Good.
is a kind of virtual cooperative which is actually designed for graduates, Muslim graduates of University of Ibadan. As of
Wow.
today, we have a membership of about 175 plus, and
Excellent.
we have a reserve of about 100 million naira plus. So
Excellent.
we started about 3 years ago, so you can see the growth has been magnificent.
Wow. Wow.
And I'm on this call. Some of my executive members are also on this call. Some of my
Good.
committee members that manage our business and investment, they are also on this call. When we
Good.
saw the advert, we said, no, this is the place we need to be, because we
Yes.
set out to provide Islamic alternative to our, if you would like to say, highly placed graduate of Muslim graduate of University of Ibadan who are looking for that alternative and want to be sure that what we are providing in terms of product, in terms of package, is actually the real
Wow.
alternative, not something
Thank you
dressed
so
as
much.
alternative. So that is why we are here. Thank you.
Thank you so much. Thank you so much. I really appreciate that. I'm happy you are here. And I hope maybe towards the end, I'll also learn something from you with your vast experience. Madam, I can see Mustafa Suleiman. I think he raised his hand earlier. Yes.
Yes. Assalamu alaikum warahmatullah, Dr. Nabil.
Walaikum
Such an
assalam wa
honor
rahmatullah.
to be here with you. My name is Engineer Mustafa Suleiman, and I'm the head of the purchase committee of Voa Cement Multi-Purpose Cooperative Society here in Sokoto. And very quickly, I'd just like to say that my expectation here is to have, that yardstick with which to continue to work with, where we would continue to ensure that we are dealing within the framework of the Sharia. Thank you very much.
Thank you so much. Thank you so much. I think I have to stop here. I can see more people are raising their hands. I'll give the chance if there's any, maybe like 10 to 15 minutes towards the end. The organizers will permit, we can take more contributions, inshallah. Thank you so much. I can see I have some people from Ibadan, some from Sokoto, and some are coming from Kaduna. So Alhamdulillah, I think all the things are well represented. So you see, when we have idle funds, especially in Islamic cooperatives, there are issues which I'm sure you will all believe me, especially those who are coming from their organizations, their Islamic cooperative organizations. Number one, you have a pressure of they are expecting profit at the end of the year. You have issues of liquidity. Sometimes matching between demand and supply of liquidity is an issue. When people need money, you really have the liquidity to give them instantly, or you have to liquidate some of your assets. Preservation. to make sure that everything continues, all risks are well mitigated, and to ensure that there is continuity in the business, in the operations, without any disruption. And also trust is a very important issue we need to address whenever we are structuring any products for our cooperative society. So informal pooling, when we put money together, as long as we don't formalize it, it continues to look informal. Unless we take a deliberate effort to make those funds we are pulling together to be, well structured and to be well documented, and done in a manner that everybody is going to feel safe as a member in that cooperative society. We see Mudarabah as a very suitable product, a very good product that cooperative society can use. If well structured, it can help them to grow very fast and to address all those 4 issues which I mentioned. So as we proceed, I hope by the end of this presentation, we will have an idea on how to structure, an idea on how to do the pricing, an idea on the control mechanisms, and hopefully being able to launch your Mudarabah. I'm going to give like 3 models of the Mudarabah, which cooperatives can adopt. And each one of them has its own pros and cons. But there's a way to start, and there's the way to continue, and there's a way to sustain. So each model you are starting, I'm going to show you how to start, how to, expand, and then how to sustain the system. So let us talk a little bit about the Mudarabah itself, because I'm sure some people might need some little information with regards to what really Mudarabah is. You see, Mudarabah is an Arabic word, and it means partnership. Partnership in the profit, where one party is giving the capital and the other party is serving as the Mudarib, as the manager of the business. So we have 2 parties. The first party, the capital provider, is known as Rabbul Mal, and then the manager is known as the Mudarib. What we are proposing in this presentation is where the cooperative society is going to be the Mudarib, of course. So they are going to collect funds from their members, invest the funds, and give them profits at the end of the day. What happens if there is losses? If there is losses, it's going to be borne by the capital providers. But as we mentioned here, genuine losses. Because if the loss is due to negligence or breach or any fraud from the manager, he has to pay it back. He is expected to bear the loss as well. And we always mention that we are talking about commercial losses. So not losses, not general losses, because each loss, we have to quantify it. We have to look at what really caused the loss. For example, losses due to Sharia non-compliance. Sometimes, and many a times, it's due to negligence. It's due to, many instances. But if we can really establish that there's no negligence, even with that, then we can also consider it as a loss that is going to be mitigated or borne by the capital provider. So the bottom line is that the capital provider bears the losses, only genuine losses. If he can establish that the losses are not genuine, then he can claim damages. So these are the important points with regards to structuring a Mudarabah product. Number 1, we need to know the capital. Okay? What is the amount we are going to invest, the form, and delivery, and everything should be clear. So in this case, maybe we are talking about cash. We are talking about Naira notes. Okay? And sometimes we set a minimum amount to join the scheme. So we can say the minimum amount is 100,000, for example. Then the activity must be permissible. So the Mudarib, since he's doing a Sharia compliant business, he is expected to do his business in only Sharia compliant businesses. And with this, he needs to do a proper Sharia screening in wherever he's going to place funds. By Sharia screening, it means that he's going to check any business to see if there's any haram elements in that business. If the element haram is there, he is expected to avoid it as much as possible. Pre-agreed ratio. Normally, we set up a pre-agreed ratio. And what happens here is that we will agree between the capital provider and the manager, how are we going to share the profits? Are we sharing the profit 70-30, which is a very common practice, whereby the capital provider takes 70% of the profits and the Mudarib, that is the manager, takes 30%. Some go for 60-40, but I hardly see anything beyond that. So 40 goes for the capital, 60 goes to the capital provider, and 40 goes to the manager of the business. And also we need to know that what we are sharing here is the actual profit, okay, not percentage of capital. So any investment scheme based on Mudarabah should not guarantee the actual capital. Sorry, should not guarantee the profit, or should not set the profit as a percentage of the capital contributed. I do see some investment advice from some fund managers. They will clearly write your total investment amount, 1 million. Your profit, 20%. 20% of what? This is big. And this may raise a lot of Sharia issues. We need to know and really be clear about what is the percentage of the actual profit, but not a percentage of the capital that is being contributed. So some will just tell you, we are paying you 20% of expected profit of 20% of the capital. Even this is not correct. You have to mention in clear terms how you are going to share the profit. Okay? You have to mention that who takes what percentage and the other takes what percentage. And then you mention this is the expected profit. Yes, you can put it in percentage. Expected profit is so amount. And below you need to come and write a disclaimer that these are expected variables based on historical figures, blah, blah, blah. You should know that your profit is not guaranteed, and so on. This is very important so that you will all be in clear terms. In fact, this is we call it a disclaimer that is a mandatory disclaimer in your investment processes so that everybody knows that you are not giving the percentage of the capital. We should also know that no capital should be guaranteed. So by taking your money, maybe 10 million naira, we should not guarantee you that your capital will be preserved forever, because there might be losses, and as part of the losses may top part of the capital you have provided. Okay? Fair loss. That is why we say commercial losses normally will be borne by the capital provider, but other losses that are due to negligence will not be borne by the capital provider. Also, we need to ensure reconciled distributions. Many fund managers and many schemes, they do give profits on accounts, they call it. So they give profits before the due date. So if the business is running, you may not need to wait until the end of the chain to make payments as profits. You can give out profits at an earlier period, but it has to be reconciled with the actual profits recognized at the end of the duration. Okay? So projected returns may guide decisions, but they must never be represented as guaranteed outcomes. That is very important. So here I try to give a comparison between Mudarabah and conventional loans. The relationship in a Mudarabah is a profit sharing investment. Whereas in a conventional loan, it is a deposit you are making. It is a debt. It's a loan obligation. In Mudarabah, the capital is owned by the investors, whereas in the conventional, the loan is a loan that you transfer it, or it's a money that you transfer it as loan to the other party. The returns in Mudarabah are contingent here on actual profit. Okay? But for the conventional, it is a predetermined interest. So the interest is predetermined and it will not change. It is fixed. Unless if it is compounded, then it can even continue to increase if there's any default or something like that. The risk, commercial risk is retained by investors, as we mentioned. Then borrower owes principal and interest. So in Mudarabah, the Mudarib, he takes the risk where there is a commercial loss, losses due to market issues, due to systemic problems, due to normal day-to-day business losses that any businessman knows happens. But in the conventional loan, the borrower owes the principal and the interest. So he must pay back the principal, he must pay back the interest at the due date. In Mudarabah, there is no guarantee of capital, whereas in loan, the principal guarantee the capital at whatever cost. Then, if there's losses, it's borne by invested capital, and in conventional, it is generally borne by the borrower. And manager in Mudarabah is a fiduciary entrepreneur within the mandate, so he has mandates given to him to work with. But whereas in conventional loan, it is a debtor or intermediary. The capital provider has nothing to do with the kind of business that is going to take place. So here, as you can see, there are significant differences between Mudarabah and conventional loan. And we should try as much as possible whenever structuring any Mudarabah products to make it significantly, clearly different from a conventional loan. We don't need to mimic any conventional practice to get our market. No, most of the times it is the other way around. People come because it is Mudarabah, not because it is a conventional loan. If they are coming because it is called Mudarabah, then show them that it is a real Mudarabah. Don't try to mimic anything from the conventional practice. Okay. So, how do we start? You see, first of all, it starts with the members, and the members collectively will provide the capital, and this will be the investment capital that is going to be pooled into a separate account or a separate register, which is managed and held by the officials of the cooperative society. So they are not going to pull it into other accounts. Normally, cooperative, they used to have a savings account. So savings account should be different from this account. Okay? Then the investment mandate should be clear. What are they going to do with the funds that is going to be invested through this Mudarabah model? Then the cooperative, the officials will serve as the Mudarib, maybe through a committee that is set to ensure this Mudarabah works without any problem. They will do the management, they will approve investment, and all the operations of the scheme. The outcome, if there's any profit, is going to be shared. If there's losses, it's going to be absorbed by the capital contributors, except where established there is negligence or breach. So now, here are like 3 models which we can choose to start with. And I believe it all depends on how the cooperative society looks like, how mature it is, how much capital do they have, what is their expertise. Because managing funds is not for everyone. You need to learn how to manage funds. It is a trust, it is amana, and it requires a lot of time, a lot of effort. So if you are busy with other things, please do not add this as additional burden to yourself. Because if you really want to do it, get it right, you need to allocate a lot of time for this. Regular follow-ups, regular checks and balancing to ensure everything is going fine. So we have like three models. Number one, the cooperative as a mudarib. So when people pool in their funds, the cooperative society will become the mudarib, meaning the officials are going to manage the businesses directly. They may also decide to be a wakil. So people will pool funds for the in that account, and the official or the cooperative society now will just be a wakil serving on behalf of the members, and they will engage an external party, maybe an external firm, an external company, to do the business on their behalf. So it is like an MOU between the two, that we will be gathering money and they will be giving you the money to do the investment on our behalf. So that external party is the mudarib, and now the officials are just serving as wakil. They are not directly doing the investment by themselves. The third option is you have a two-tier mudarabah. So the members will pool funds to the cooperative society, and the cooperative society will enter into another mudarabah. So we have two sorts of mudarabah, and this is also possible. It's very similar to B, but C seems to be more technical and more robust than B. So let us take them one by one. The mechanism for the first one is the mudarabah fund. The members will fund, and the cooperative will manage the funds and do the business directly. Indeed, the cooperative acts for members. They act on their behalf, and they will employ a specialist to manage that investment on their behalf. But for the third, cooperative raises funds and then enters into a parallel mudaraba, a downstream mudaraba with another entity to do business on their behalf. So the first one is strong because it is simple, it is direct, and normally you don't spend a lot of external costs because you are managing it yourself. But for B, that is for the second model, there is a professional investment capability. So even if you are not professionals, because you have now employed a specialist to do it on your behalf, it's going to be much easier for you, and you enjoy that professional expertise. For C, it is easier to finance entrepreneurs flexibly. So the cooperative society may decide to identify maybe like 3 to 5 sectors, and they will go into another mudaraba with these sectors. So they are not doing the business themselves, but they have entered a different mudaraba. This will help to finance other entrepreneurs to grow as well, because they are helping other businesses to grow as well. So as you can see, each has its own advantage. But what about the risk? For the first model, there might be a weak internal capability because they might be busy with other engagements, so they may not have time to, put all the control mechanisms in place. But in B, there might be an additional complexity of the component of agency itself, because now you are managing a different party, and now you are agents. You have nothing to do with the business decisions. What you are just doing is that you are just pulling the funds and giving it to another party. There's also an issue of fee. As the wakil, you may also be entitled to a fee, so that fee goes to the management, goes to the cooperative society. These are all additional costs. For C, there is higher monitoring and counterparty risk. So if the other party fails, other business fails, the cooperative society also fails in this regard. And that is why you need more monitoring, higher monitoring, to ensure that whatever they are doing is correct. But for B, that may not be a problem because he's an employee. You employed him as a specialist to come and work for you, even though he's not part of the cooperative society, but he is working for the cooperative society. There is also an issue of documentation. You see, in A, it's one mudarabah agreement is okay for that. But for B, there's a mudarabah, there's a separate murabaha, there's also a fee disclosure. How much are you charging for the wakala fee? It also needs to be also clear. For C, there are two contracts. So authority to reinvest. You have a contract with you and the members, and you have another contract with you and the second mudarib. Okay? And you have been given authority to reinvest. So you see, for a starter, I think B should be better, should be best for a start. To start with, it's better to start. As you are developing, as you are striving to grow, it's better you employ somebody or you employ another firm and give them the mandate to manage all your funds on your behalf. It is easier, it is safer for you to monitor the progress in this regard. But for A can also go where you have the capability. Okay? Where you have the capability, you have experts within you who you are sure that you can control them very, very well. I will not suggest this for a start, because they might end up with a lot of trouble between the members and the cooperative officials. So C may come second. So you may enter into a two-tier mudarabah if you have little capability. The little capability of identifying good entrepreneurs, of identifying good ventures, good avenues, then you can go for C as your second model. For the last model, that is when you are well developed. Maybe you have a whole department of investment, you have experts in there, you are sure can do all the businesses, you can handle it, you can manage it as a full-fledged fund management company, then you go for it. So for a start, B should come first, then C, then A. So I believe with this, you can choose how and what model works best for you. Okay? I spent a lot of time on this slide. I'm trying to move a little bit faster. I have a lot to cover. Um, uh, uh, so all the times when we are doing the structuring process, if, for example, we have chosen, let's say we have chosen the first model, which is the cooperative as the mudarib, which I'm sure some of you would like to start with it, even though it seems to be the riskiest and the most difficult, and the one that requires a lot of expertise. So here, this is the flow. People will subscribe. After they subscribe, you make sure you segregate within the accounts. You have a separate account for that. Then you do all the approval processes for how the funds are going to be deployed. Then you deploy the funds for investments. You do the investments yourself, or you may wish to assign somebody. Then you continue to measure. Then when there's profit, you share the profit. If there's any, at the end of the time, in the period, you give a report. And then when people want, they can do the redemption whenever they want to move out, or they want to get their profit, or they want to replace their investments. So there are important terms, which are product terms, we should make sure we put in place so that we ensure that everybody understands their expectations in the investment scheme. You see, for example, we need to set up the minimum subscription. So it depends on maybe the kind of income of the members. If the income is very high, you can start with a high amount. People working, for example, in NNPC, CBN, if they have their own cooperative, maybe up to 5 million as a start. Okay, if that will work for them, we can raise up to like 5 million. And it means that they will start with a large amount of money and they will have access to several investments right from inception. Okay, they should also set up how to top up. So I can start maybe with a minimum amount of 200,000, but I can top up 50,000 every month to continue to generate and to my consent. So if you want to renew, then they will allow you to renew your investment. So you can say that for a start, maybe you can say you can start for like 6 months, and then from 6 months, that is the minimum duration. You have to lock in your capital. So you will not invest, and after 2 months, you ask for your money back. Then how are you going to distribute profits? Is it quarterly or is it on maturity? Or is it annually? It all depends on the policy you want to adopt. Then there should be proper records. Proper records so that you have a register. It can be on an Excel sheet, but ideally you can have a software that will manage this for you, especially if you have many members. Okay? So an IT a person can structure a small basic product for what do you call it, application for you, so that members can even track their investments by themselves. They can print out statements. They can do so many activities on their accounts. This will help a lot. You can even automate the process of, making payments so that directly from his mobile account, he can just forward the funds directly into the cooperative MUDARABAH scheme, so that immediately if he does the deposits, it will pop up the online register and he will be able to access his new balance on his investments. So you need to also put control measures on liquidity. How much cash are you going to keep? Maybe you may say 5% of liquidity is going to be reserved at all times, so that in case anybody needs money, we don't have to run helter-skelter trying to dispose any of our assets. And there's the need of net asset valuation. Normally these are done by financial experts and accountants. So the assets you hold will be valued on a daily basis or a weekly basis or an annual basis, depending on how frequent you feel that is going to be okay for you. But it shouldn't be more than on a monthly basis, because every day money is coming out and moving out. So you need to know and be able to track what is the value of your investment at any given point in time. If there are any risks, all these risks need to be mentioned clearly. And how and what measures are you taking to ensure that these risks are not are mitigated as much as possible? Then banking. You need to bank only with a Sharia compliant bank, either Jaiz Bank, Taj Bank, Alternative Bank, Summit Bank, Lotus Bank. Any of these banks, they are Sharia compliant.
Please, Dr.
To the
Daniel.
official cooperative to make sure that they are operating always in Sharia compliant. They are allowed to do it. And we have about 50,000 units. So it means that your Mudarabah scheme, each unit is going to be valued at 1,000 naira. So easily now, if you have this record, you will so let me move forward, please. Here also we have another illustration to show that profits are going to be shared by ratio. So if you have an investment of like the total capital of the cooperative is 50 million under Mudarabah investment account, and the profit generated is 10 million naira. So if you are to give the profits, the members will take 70%, and the cooperative, which is the Mudarib, will take 30%. So 7 million goes to the members, and 3 million goes to the Mudarib. So if you have invested, for example, for a 5 million for about 9 months, okay, so we take the weighted balance, because your funds is staying only for 9 months, not 12, not a year. So we have to do the calculation. That will be 5 million divided by times 9/12, which is 9 months out of 12 months, to give you 3.75 million. And this is the total value of your funds that is being invested for that period. So with that, we can determine your profit, which is going to be 583,000 at the end of the day. This may seem to be a little bit technical, but this is how members should be able to track what is going on the cooperative, on their Mudarabah accounts. This is how we are going to mitigate risk, which I think I'm going to move a little bit faster. Okay. So this is a very important slide, which I would like to discuss a little bit about it. So when the cooperative society gets the funds, how will they invest them? They will invest the funds in commodity and halal distribution trades. These are some of the ideal ways. So they can buy and sell if they are doing the investments directly. They can also go into agriculture and processing. It's also Sharia compliant. Equipment leasing through Ijara, or they can go into trade financing using Mudarabah, Salam, or Istisna. So they are collecting funds through Mudarabah, but they can use several Sharia compliant models to continue to run the business. Real assets and Sharia approved rental property, regulated Islamic placements, and approved sukuk. All these are examples of how you can make your investments after the funds have been pulled. These are some areas which you are not expected to invest. They are prohibited according to Sharia, and some of them are high risk, and they are not suitable for cooperative societies. For example, fixed monthly or annual return promises. Of course, this is not allowed. This is not a good practice to promise a fixed monthly return or fixed annual return, as I mentioned earlier. Then there's also a practice which I know some fund managers do. When they don't have profits, so now they'll be taken from the capital of other investors and they'll be paid. This is not allowed at all. This is not Sharia compliant. And it makes the whole scheme to look like a Ponzi scheme. That is why we should try as much as possible to avoid this. Then, if there is any related party transaction, it needs to be disclosed. Because some cooperatives, they will just gather the funds and they will go and fund or finance their own personal businesses. Instead of investing in other people's business, they will invest in their own businesses. This is not allowed because there is a conflict of interest in this kind of arrangements. Concentration on one borrower or sector or project is also not allowed. So there is going to be concentration risk. That is why diversification is very important. You place here, you place there, you place there. Place the funds in several places, not only in one place. Then profit distributions funded from capital. This is also not allowed. When there's no profit, then they will take part of your capital and pay you as profit. And say later when they make profits, then they will generate the profit. This is not allowed. Even though there are issues on accrual, whether you can accrue profit, but this has to be accrual based on actual profits or profits that are guaranteed already, but not profits that are just expected. Because if anything happens, at the end of the day, you could not pay, it means that you have chopped the capital and there's nothing to give to the members at the end of the day. And also, there shouldn't be a practice where only one person does all the approvals, he pulls the fund, he manages the records. No, it should be elaborate enough. If you really want to manage it directly by yourself, by appointing different staff to do different forms of practices. So if you are really keen into doing it by yourself, you need to have a well-governed structure. You may have an investment committee, and you may have a finance and operations team who is going to look at that aspect. You need a Sharia oversight, a Sharia person, at least one person who understands Sharia compliant business, who understands what is right and what is wrong. You need to have also somebody who is looking at risk and compliance. The risk and compliance is different from investment. The investment committee, they are always trying to maximize profits, whereas the risk and compliance is always trying to ensure that things are done in the right way. Then you need to have an internal and external assurance team so that they are going to check, for example, external auditors that will come and check the practices to make sure that things are going well. So this is the Sharia governance, how it's supposed to follow. We conceptualize the products, we document everything, we do the screening, we monitor, we review, and we mediate if there's any problem so that things go better. And these are some of the kinds of risks that are associated with MUDARABAH investment schemes, whereby we need to put all the mitigants in place. You see, there's credit risk. So you need to do your due diligence. You may need to take collaterals and put exposure limits. So you may say that you are not going to go beyond 30% of your total capital into one sector to avoid sector concentration. So, for example, you will not invest more than 30% in real estate, for example. So you need to have a plan on how your exposure is going to look like in every kind of investment. Liquidity. You need to have matching. You need to match your liquidity with investments so that a time will not come that you don't have funds at all because you have invested all the funds at the same time. You need to be matching your maturity maybe every week or every month, so that at least at intervals, funds are coming back, and you may need to set some buffers so that you will not be taken by surprise. Sharia is also very important. You must make sure that you do Sharia monitoring so that all the practices are compliant with Sharia. And other forms of risk, as you can see. Mr. Moderator, how many minutes do I have, please? I know you are very generous.
You can proceed, sir. Maybe.
Okay, permit me maybe 5 to 10 minutes to round off. Inshallah.
Yeah, that.
Okay, thank you so much. So we need to protect capital because normally the challenge you may have if you are doing into this kind of business is how to protect the capital itself. Not only to mention the issue of profit making, because sometimes some businesses will come with a lot of risk. There is systemic risk that can come and take all the capital. Okay? So screening is very important. You screen before you do everything. You screen the person you are going to give your money, you screen the businesses, you do all your due diligence. You diversify. Okay? As I mentioned earlier, not only in one sector, you secure. You put collateral, you ensure there's a couple for each business or each item you finance. You do the monitoring, proper monitoring, and you set up buffers to ensure that there is cash available at all times. I think I can move forward still. That is an example. So this is just a scenario to show you what happens if there are really losses. If there are losses, it will chop part of your profits. So you have to reserve capital before you can declare profit. If capital is not preserved, then there is no profit that can be declared. For example, our total capital is 50 million. And we put a lot of investments, maybe investing in like 5 sectors. And after integrating, aggregating all the profits, because we lost in some of the businesses, the capital was 49 million, meaning that we were not able to preserve the capital itself. But maybe if we liquidate one of maybe the final business, we can reach 50 million. So you should not consider that last business that you are liquidating as a profit. No, it's not really a profit. It is capital meant to preserve, rather it is profit that is meant to preserve the capital. So the capital to be preserved at all times. Whatever comes after preserving the capital, that is what you consider as profit. Okay? So in this scenario, the expected profit was about 17 million. But at the end of the day, they were able to declare about 12 million. And 2 million was chopped by commercial losses. So now what they are remaining with is just about 12 million to be shared as profit. And at the end of the day, the members were able to get like 8.4 million, and the cooperative was able to raise 3.6 million. This is just an example to show you that things don't always go well when you are into this kind of businesses. The expectations are high, but sometimes whenever things go against you, you will be really, really surprised. I remember, I can give this as an example. We financed, in my company, we financed a person, some solar panels and installation worth 90 million. He had a plaza. I think we did the installation today. The following, after like maybe 2 weeks, there was a very strong wind, and that wind came and it destroyed about over 100 solar panels, because we installed about 180 panels. About 100 panels got damaged because of that wind. And it was a loss of about 20 million naira. Even though it was a MUDARABAH, he has already signed the MUDARABAH that we have completed the project, but we had to bear part of the losses. Why? because it was practical that he cannot pay us because he has to sell the power to the shops. I think there were about 90 shops in the plaza before he is able to pay us. So we had to take part of the losses just to ensure that our profits are sustained. So instead of us expecting to get maybe like 50 million, now our losses will be maybe like 45 million, which of course is still profit to us, but in comparison to our expected profits, it is really a loss. So it's not an easy task, as I mentioned. There are a lot of technicalities, and I don't think it's something we can discuss in this short period of time. Normally, it should be a workshop, maybe where you can spend like 4 hours, 5 hours to discuss a lot. He mentioned about Kunuz Investments, which is my company. And actually, I would like to just take like 3 minutes to tell you about Kunuz and to tell you that Kunuz is also another option where you can engage another party to do this kind of business on your behalf. Kunuz is a Sharia compliant fund management company. It was licensed by Securities and Exchange Commission in 2025. And the head office is in Kano, even though our office in Abuja will start working, inshallah, in October very soon. It's fully Sharia compliant. We don't have any form of non-compliant windows. And what we do is a MUDARABAH investment portfolio. So we also take money from cooperative societies. They will give us money and we will invest it as part of our portfolio. And normally, the cooperative will invest, Kunuz will manage, then we give you profits and we'll make sure there's full transparency. Our targeted profits are about 16 to 20% per annum. In fact, in June, we were able to surpass 20% returns per annum because we declare profits on a monthly basis. So it's a simpler model. If you want to take it, it's a route. We are open if there's anybody who wants to join us, who wants to try. It's a way of diversifying. I'm not really saying that who knows will do everything for you, but you can make it as a policy in your own structure to say that maybe 20% or 30% of us, we are going to 30% of our capital will go to Kunuz, and Kunuz will give us, and we will take the remaining 80% to other places. So if you like, we can have a meeting, we can have a mandate, and we can see how you can invest bi'idhnillahi ta'ala. So as you know, my last statement is that you should know that a successful Mudarabah product is not merely a profit sharing agreement. It's a complete system of trust, governance, professional investment management, and Sharia accountability. I'm very sorry I had to skip a lot so that I meet the time. Jazakumullahu khairan. Assalamu alaikum wa rahmatullahi wa barakatuh.
وعليكم السلام ورحمة الله وبركاته. Jazakumullah khairan, Doctor. I will really appreciate you. Although that was unpaid advertisement for Kunuz, mashallah. Jazakumullah khairan. Really appreciate your session. And I can see that there are brothers and sisters on this call who are ready to ask questions from what they've listened to. But before we move on to that, the organizer will be having a very short interlude within 2 to 3 minutes. And that will be displayed by my brother, Rab Kudus.
No.
A short interlude.
Compliance digital platform built in. Introducing a Sharia compliance digital platform built to empower and transform Islamic cooperative across Africa. And ethical cooperative banking has a service, HALCO. Today, many Islamic cooperatives still rely on manual records, paper-based savings, and traditional loan approval, slowing operation and reducing financial transparency. HALCO helps simplify and automate every aspect of cooperative management, from savings to financing, while staying fully aligned with Islamic finance principles. Alcohol has built an amazing feature for both admins and also members of cooperative. A centralized dashboard for managing members, savings, and financing. An automated report and analytics for better decision making, which reduce paperwork and improve operational efficiency through real-time payment collection and transfer for admins, which helps with transparency and build trust and accountability. While for members, Halcom has a comprehensive dashboard to track your savings and financing, automate your loan and repayment through direct debit or instant transfer, transparent records of contribution and profit, faster loans approval, and simplified repayment tracking. A secure digital platform rooted in Islamic financial values. At ACCO, we help to empower Islamic cooperative to operate more efficiently, enhance member trust, and achieve sustainable growth, all within a Sharia-compliant framework. ACCO is redefining cooperative banking for the digital era. Get started today by contacting us on 070-4023-3632 or visit www.alcohol.app.
Yeah, Assalamualaikum.
Yeah, Jazakumullah. Now, Jazakumullah khairan. That was should I call it a presentation on what we do at Alcohol. EasyBack is one of our products, and that video explains it better. So, inshallah, without wasting much of our time, we are going to move on to questions. Please, I can see that we've raised our hand. I can see 3 people here. I want to say that why you want to ask your question, please go straight to the point so that we can all save our time. I'll start from Awal Muhammad.
Yeah, Assalamu alaikum. Can you hear me?
Yeah, you can hear you now. So.
Yeah, thank you for the opportunity and also to thank the presenter for a well-presented paper. So, just a few points I jot here. So, from my cooperative experience, we are doing option A, which is a direct MUDARABAH. And what we do is we create windows. So we don't do monthly or weekly things. It's just a few clear windows, maybe 6 months, 1 year. So as such, we don't keep any liquidity. We invest everything because we already have people who are willing to be financed through MUDARABAH. Actually, the cooperative has matured on MUDARABAH, but it's run out of fund. So we now use the MUDARABAH as a model, and we give it about 80% capital profit, the percentage of the profit to the Rabbul Mal, just to entice and encourage them to come in. But why I'm talking here is even within after that window, when okay, yeah, so thank you. So within the period, if there are other need of Murabaha financing, we still open the window and we treat that as individual cases. So I don't know whether that practice is allowed, because after we have done the actual window is closed, but if other requests arises from members for financing through Murabaha, we also open the gate and then take the fund exactly what we need, and then we close and we finance. So so we have a multiple layer of windows, not just one single window that open and close. So I want maybe whether that is within the compliance or what we're doing is wrong. Thank you.
Okay. I think I'm not very clear with the last portion of the question, but I understand you are more into Murabaha. And also, lately you said you do Mudarabah. Please, can you tell me how do you do the Mudarabah, please? You give people funds to go and do businesses, or what do they do with the money?
Okay, yeah. So the cooperative is fully into because members come with their needs. I want to buy a house. I want to buy a land. I want to buy solar items and what have you. So the normal Murabaha we buy and we sell to members. So because of the
That is
capital
Murabaha.
need,
Yes.
yeah, Murabaha, because of the capital needed, then there is scarcity of fund. So and as
Yes.
such,
Liquidity
we
problem.
now we now ask members who are having idle capital to come up and give us those capital so that we do mudaraba between them and us, and then murabaha between the cooperative and the financiers. I mean the who are seeking for financing. So
Say that again, please. Say that again. Murabaha between?
murabaha is between cooperative and members who want to be financed.
Excellent. Then
While
Mudarabah?
Mudaraba is between members who have excess ideal fund and the cooperative.
So you collect funds in the Mudarabah
Yes,
from members.
from members.
Oh,
And
then
then
you,
we because we have a backlog of huge requests from members for financing.
then you do
So
Murabaha with it.
we do Muraba. So we are working
Okay.
from answer to question. By the time we
Okay.
aggregate needs, then we
Yes.
come to the Mudaraba window and request for funding. When then we now come back and finance this. So we don't keep the money. So anything we generate, we invest 100%. So there is no issue of liquidity.
Yes. Yes.
So that intermittent coming and going. So because the model you have highlight is more of maybe a structured way of saying we're opening this time and we're closing this time, redemption period and what have you. Thank you.
Yes, which is better. Yes. So normally this kind of arrangement it works if you are a small group and there's understanding. But when the number continue to grow, when the numbers continue to grow, and you know there are people who are very critical on what is really happening inside. So I think that is when the framework should be very clear, the policies should be put in place, and we should also reserve some money as capital, as a buffer. As if you don't have that buffer, whenever you want to do, somebody is asking for redemption, you will keep on holding his money for long and long and long, and that is not selling good about the cooperative society. It shows inefficiency in actual sense. So what I would rather suggest is, yes, even the murabaha you mentioned you are doing, I see it as a form of mudaraba. So that's why I couldn't distinguish between the first and the second. The second you mentioned is just when there are a lot of requests, you go to the members and raise the funds. It's also mudaraba. Or when you collect funds from the savings of people and invest it on their behalf, it's also mudaraba. So I believe you are doing the same thing on different platforms. It may look better if you can merge them together and have a one system that everybody can understand and segregate the accounts. This is a saving. So the amount here is just for you to save. And if the cooperative is using the funds, then they have to guarantee the amount. So you have to keep a buffer to ensure that whenever a saving holder, a savings account holder needs his money, you are going to give him his money. But if it is an investment account, then you can put more strict, terms and conditions with regards to its funds. You can have a lock-in period. You can tell him a period of redemption and everything. That is why it is better to have to segregate them between savings and investment. They should be clearly different. I think this is the best practice as I know. Wallahu alam. Yes, thank you so much.
Yeah, Jazakumullah khairan, sir. So let's quickly go to the next person. Adia Katila Yotola.
Assalamu alaikum warahmatullahi wabarakatuh. Thank you so much to the facilitator for the well delivered. I want to ask, my questions are three. The first one is regarding the last speaker or the questioner. You said that it's always good to have a separate pause for investment funds and a separate fund for pause for the savings, so that there wouldn't be a cost for whereby we have all the money that has been put together being used, so that when there is any cost for someone to redeem his fund, it will not be a problem. So I just want to get that quite right. That's the first. The second one is, as a cooperative, can we also invest in takaful, whereby we mitigate our own risk as well? That's the second question. The third question is, can a cooperative invest in or finance transport means of transport, maybe for members or for non-members? Those are the questions.
Yeah, thank you so much for the question. Yes, as I mentioned, my experience, my banking experience, and also my little experience in fund management is what showed me that you always need a savings account to be treated as a savings account, meaning that members are saving. So, for example, some cooperative societies will say you can save up to maybe 6 months before you can take your money. So some people are coming with the objective of saving. He doesn't have much interest in the investment side. So you should allow him to do that. So if he's investing, let's just say they are investing they are saving for, let's say, 6 months. So this amount that they are investing for 6 months, you must put it in your account register that this guy is coming to take his money after 6 months. And if your policy allows for redemption even of the savings, even before that period, you should also make a provision for that. So this works better if the savings account is treated as a savings account. But if it is an investment, normally you have more liberty to lock him. To say that, no, we cannot give you this money at so time, because we have already deployed the funds for another venture. So a savings account, when it is treated as an investment account, it will create a lot of problems, and it will mean that you will always be trapped into liquidity crisis, which actually is one of the major problems of every financial institution. Matching between demand and supply for liquid is very important, and one way is to ensure that savings account holders are treated different from investment account holders, so that you ensure that your business continues the sustainability. That is why I stressed on that. Your second question is with regards to takaful. Of course, as a good practice, takaful should be used at any point in time, whenever you are given financing, especially. So when you are financing a car, that car you are financing must be are registered for takaful. Takaful to be made on it. Okay. If there are some other investments which you do with the money, maybe you invest in agriculture, you invest in poultry or something like that. Even that there is a careful cover for such kind of businesses. Ask for that. It will help you. You just make payment for that and you are covered. Because there's a lot of risk associated to investments, as you know. So, and takaful is one of the major ways that you can ensure that all the risks are mitigated. In fact, in my own experience, we even go to the extent of doing takaful for the collateral itself. Because I remember we held a collateral of a person we financed, and he gave us his plaza as collateral. So even that plaza, we also made it under takaful, so that anything that happens to that plaza, that takaful will also cover it. Even though we are not financing the plaza, but we are holding it as collateral, but we also, we also place it on takaful. With regards to the last question, transportation. Okay, let me mention two things here. If you are financing like cars, the asset, I think it's a yes. But if you are financing transportation of goods, because it's also transport, I think you need to be careful. During my times in banking, during our training sessions, they used to tell us that one of the riskiest businesses is to finance college services, transporting of goods from one point to another. It's very risky. You tend to lose your whole capital very easily. If there's a couple of goods in transit and what have you, that may help and that may cover to a large extent. But other than that, you need to be careful. I don't think transport is something, because sometimes it's a total loss if the proper measures are not taken in place. I don't know whether you have a bitter experience towards that, but yes, it is done, and people or cooperative societies do finance vehicles and what have you. Thank you.
Excuse me. My question, that third question, is related to public transport, whereby we have like those people who buy tricycle, and
Yes.
people buy tricycle for them, and it's going to pay in installment. So the money of the tricycle has been paid with the
Yes.
cost loss margin. So that's why I'm asking that, can a cooperative also put that in part of their portfolio?
Yes, it can be part of a product if they want to do it. I feel it's risky, as I mentioned. It's risky. I know my company, we finance somebody his tricycle, but why we were convinced to finance him is because he is into the business. I think he has about 3 to 4 of them already. So we were able to trace the cash flow, his performance, and everything. Everything was clear to us. That is where we went ahead to finance. But for a startup, I think on a personal basis, I will not approve that. I feel that it's highly risky, even if they're careful. I believe you need to understand request for additional for funding for tricycle. Gaskiya, you need to do it very carefully, because very easily there are a lot of risks associated to that. The risk is high. I consider that as high risk investment, which is not meant for cooperative society fund. They should at all times try to go for low to medium, because it's a pool that they shouldn't go into that. This is my understanding to that.
Thank you,
Okay?
sir.
You're welcome.
All right, thank you, sir. Let's quickly have Mr. Let's quickly have Mr. Mukhtar Ghazali.
Now, good afternoon. Thank you very much. Assalamu alaikum warahmatullahi wabarakatuh. One, I want to request for the contact number of Mr. Lukman Omotosho, who actually talked at the beginning of this lecture. Then number two, I want to talk about the investment in transportation as asked by one of the participants today. My experience in cooperative has shown that the community-based cooperative cannot do without funding, some means of transportation, most importantly, among the members. I said community-based cooperatives because one, that is where members, the cooperative can get adequate profits. Then number two, it helps in empowering the cooperative members. So that is, I said community-based, but I think the best way for cooperative to do, if they want to embark on financing transportation businesses, is they should use MUDARABAH system of financing. If you buy a keke napep, you buy a tricycle, you buy a motor car for a member, sell it at a cost plus. It is easier to recoup your money, and the profit therein is more higher than other investments. My example, I have dual experiences in this. One, I'm into transportation business. Number two, I have been managing a cooperative since 2005. So I have 21 years experience in cooperative management, most importantly, the community-based cooperatives. So there is no way a community-based cooperative can do without financing transportation businesses. So thank you.
All right, thank you, sir. Yes.
Thank you so much. Please, I want to do like a quick rider to what you said. Yes, I think what you said is on point. But what I just wanted to emphasize is you have to be careful. Whenever you are given financing, it's not only about the aspect of helping that you are looking at. You are looking at how the money will come back. So if I am financing a person for a vehicle he's going to use to ride to go to office, and the repayment is coming from his salary, is different from when the repayment is coming from that property itself. So whenever you are looking at a repayment coming from the assets that is financed, meaning that he is going to give another party to ride it around and to get, the income from that asset, then to pay you back, then gaskiya there's a problem in that regard. You have to be very careful. I know a lot of cases of thefts of these items. There's a lot of counterparty risk with regards to trust, moral hazard, so many things. Yes, you mentioned MUDARABAH. That is exactly what I'm mentioning about. I'm also mentioning about MUDARABAH because it's only MUDARABAH that you can finance a vehicle, not Ijara. Ijara, of course, is not ideal. It's only MUDARABAH that will work. But even that MUDARABAH, you want to make sure that the person taking that MUDARABAH is capable of paying you back. And one of the measures I do suggest is that for a startup, you have to put a lot of control measures to ensure that he can pay you back. If he is used to the business, you have more comfort in doing so. Thank you.
All right, thank you, sir. Yeah, I think by the time we come back for another session on MUDARABAH, we can discuss better on that. I will be taking these two people, then we can have vote of time. I will have to take Mr. Sanusi Mikael, then after that, Mr. Abubakar Mustafa. Then we have a question on the group chat, which I will also take after this one now.
Okay, now, thanks to the presenter, may Allah reward you. My question is from the scenario that you gave last time about the solar panel you founded through MUDARABAH and the winds that occur. My special question from that scenario is that are you obliged to reduce your profit, like instead of taking 20 and 50 million, you took 30 million, as you said, if I'm not mistaken? Are you obliged to do that, or it was just done out of sympathy and things like that? And is there any Sharia issue in such if you decide to take your full profits? So that's my question. Thank you.
Thank you so much. There's no Sharia issue in taking the full profit, but as I should mention, we did it based on compassionate grounds. We felt that that person it's not practical for him to retrieve back all those 100 panels that were damaged. So instead of that, we said, let us support him a little bit to ensure that we continue getting our profits. In Sharia, they used to say, sometimes what you want to attain to is not really wajib, but because you have to do that before another thing can happen, so it's encouraged for you to do it. And we felt that we really sympathize with him. And as I mentioned, the loss is worth about 20 million, but we decided to do some little repairs for him worth like 2 million, so that at least it's going to form part of the profits we are forfeiting to make sure that at least he continues. And he was extremely happy. And he said he promises to fix all the remaining himself. At least we feel it's a business relationship. We should try to make sure that it continues well. Yes.
All right, sir. Yeah, Mr. Mustafa Abubakar, you can have your question.
Professor. Yeah.
Dr. Nabil, you know I have to stay around to listen to you, as always. It's one of the remarkable lectures I ever heard about these, what do you call them? These institutions. Honestly, I think it will be a disservice, let me use this word, a disservice if a recorded version of this presentation is not made available to us for future references. For me in the academics, I will need it thoroughly to digest and use it for academic purposes. Apart from my involvement in other cooperative activities. Thank you.
All right, thank you, sir. Yeah, this session is recorded. Shortly, it will be uploaded on our YouTube channel, Alpha on YouTube. All our previous sessions too have been uploaded. Inshallah, we are going to upload this immediately after the session. Inshallah, sir. Thank you, Prof, for that observation. Then from the group chat, we have a question from Sister Khadija Adigu, which says that, can one repossess assets in MUDARABAH for investment assets? Doctor.
Can one repossess? I didn't hear the remaining.
Yes, she said, can one repossess assets in MUDARABAH? So
Yes.
can one repossess assets in MUDARABAH for investment assets?
Yes. Normally what we do is we place the asset itself as a collateral. So if he is not able to pay, then you take back that asset, as long as it has been stated that that asset is the collateral for that transaction. Yes, possible.
Inshallah, I think this hand has been held since. Mr. Sulaiman, Mustafa Sulaiman. Okay, I'll call on Madam Sadiq Idowu, the CEO and co-founder of Alco, to give us a short vote of thanks.
All right, thank you, Ahmed Abdul. Just to mention, we indeed are very thankful and we appreciate our guest speaker, Dr. Nabil Bello, for this insightful session. It's been really insightful and we are really happy to learn from his wealth of experience. And we hope that subsequently later in the future when we need you to also come and share with us your wealth of experience, to be a good time and we'll be happy to do that for us. It's been really insightful and we're happy to have learned from you. Again, would like to specially appreciate all of our participants. This Safari series is meant to happen monthly, where we get to discuss critical topics as it relates with Islamic cooperative and other key areas as relates with Islamic finance. So we are really thankful that we have a very good number of people that take it very important to be a part of this session. With you all, inshallah, it's been always good to come together, learn together, and see how we can advance how we manage cooperative in our respective jurisdiction. And we hope that the coming session, which is going to be next month, would duly be notified about it. So for those that registered via the Luma platform, we oftentimes send reminders, send notifications when there are upcoming sessions, and we trust that inshallah we'll be happy to receive you in our subsequent sessions. So that's basically just to appreciate Allah for this session, our guest speaker, and all participants. So as mentioned earlier, the session is recorded and will be uploaded on our YouTube channel. For those that want to have a recap, I'll get to watch again at our leisure. So inshallah, shortly after the session, would that be uploaded? Jazakallah khair.
Thank you, Sadiq Idowu. Inshallah, I thank you all for joining, and I pray to Allah subhanahu wa ta'ala to stay alive beyond the next session. Al-Fatiha. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Ar-Rahman ar-Rahim. Maliki yawmiddin. إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين. Thank you, all lecturers, and thank you, everyone. I remain your host, Abdul Wasim Sholunke. Assalamu alaikum.